Hey everybody, it's Tuesday, October 27th. Want to go ahead and let's do our market update, kind of get you caught up on what's going on and what might be coming. Last time I recorded was approximately I recorded on a Saturday, the 3rd, but that was the last market day was the 2nd. And I'd like to revisit what we talked about there. What we had generally talked about was that the market had come down into a trend support zone. And let me zoom in on that so we can see that a little bit better. We had said that as it come down into this trend support zone that we might realistically expect it to run up for a few days. And I had suspicions that it was going to run into a resistance zone and maybe fail. It stutter stepped right here, stalled as it hit that trend resistance zone, and then powered right on through, if we look back out, to what is clearly a trend resistance neighborhood, or the top of the trend range. And we see another downward leg in the market. Now, I'd like to revisit a topic that we talked about last time. Let me go ahead and remove all the line studies here. That we had talked about the volume associated with the downward legs. Now, this instrument that we're looking at this week is slightly different. Last week we were looking at the S&P exchange traded fund, the spiders. This week I'm looking at the E-Mini futures contracts that track the S&P index. Now, these are futures, which are probably your most actively traded instrument right now, and going to show you essentially that same phenomenon of the volume increasing on the downward leg. So here we see above average volume, and again, we know it's above average because it's poking up above that 20-day moving average, the black line down there, and we're seeing above average volume associated with the downward turn. And again, we look back here, we see above average volume associated with the downward turn. Here we see above average volume here. Again, downward movement in price. This particular above average volume occurred at the top, so we see it kind of topping out here. There's a big news day there and then a lot of topping action. And then again, almost 2 times the daily volume here associated with the downward movement in price. And that's kind of an interesting thing to look at and understand that what we're seeing is increased inventory or liquidity, which essentially is causing prices to drop, which is supply coming into the market. So we're seeing supply come into the market, prices dropping as that inventory comes into the market, which is essentially the only thing that could really cause this kind of a phenomenon is, in my opinion, institutional selling. Now, let me go ahead and clean that up here. And let's go ahead and drop out our perspective a little bit. And we can see that the market has been in a tremendous move. And I'm going to go ahead and change our time frame back out to the weekly time frame. We've done this a few times. And we're going to revisit that topic of overhead trend resistance. And I'm drawing a general trend line out here. Now that's a little subjective because I'm the one who plotted that line. And that line is based off of the major pivot out here at the top, this major pivot right here, and forecasting out potential trend resistance. Now we've talked about this before, and we drew the angle a little bit more shallow, and essentially potentially anticipating the top, it powered on through a little bit higher. Now we're seeing this index, or excuse me, the futures here trading at 1100, and on the spider it's 110. So we're seeing this potential big fat number out here as a resistance zone. And there's a pattern here that a lot of traders would say, hey, watch out, we've got a rising wedge. And I can draw here for you this rising wedge. And that rising wedge is an indication of slowing momentum. It essentially means that as the price is running out, it's starting to slow down, and the tops, the angle of the tops is decreasing, which again, indicative of loss of momentum. So what we're seeing is the market slow down into overhead resistance and a big fat number for the market. Now let's go ahead and drop that back into the daily chart, and let's talk about what might be coming and what we need to watch out for. What might be coming in the near term is probably we'll see the market drop down into this trend ballpark. And again, we could probably draw a trend ballpark out into here. And we'd see the market probably put in a rally for a couple of days. So don't be surprised if the next day or two we see a market rally. Then the question would be, is it going to come out and continue up, or is it going to slow down and drop down? And if we see a general shift to lower high, lower low, that is the potential beginning of a downward leg. Now let me go ahead and clean that up again. So what we're talking about here again is the potential beginning of a downward trend. So what we're watching out for is a shift to lower highs and lower lows, a failure of a support pivot, which could be indicating that the market is potentially starting to roll over. Now, we are heading into fourth quarter, which historically, November and December are very good months for the market. But the question remains is, do we think that this economy is going to push forward, that we're going to have a good retail season here in the holidays, or are we going to have a less than phenomenal retail season? Not sure, but the charts will reveal what the market thinks in the next couple of weeks, and we'll pick it up and we'll review it then. Thanks. Have a great week.